right, welcome to The Explainer. Today, we are unpacking the absolute ultimate crypto investor fantasy. You know exactly the one I mean, right? Finding that quiet, totally unnoticed project super early, throwing in a little bit of cash, and then watching it generate literally life-changing wealth a couple of years down the line. We're going to look closely at the math behind these massive dreams, the very real risks involved, and we'll use a specific token called Linea as a case study to see how a truly disciplined investor actually navigates this space. Okay, let's dive into this. It's a question we have all asked ourselves at some point. What if I could find the next Bitcoin? What if I could uncover the next XRP? Look, it is completely natural to want to transform a tiny, affordable investment today into an absolute fortune tomorrow. We aren't here to judge that emotional desire at all. In fact, that hope, that's the engine that brings almost everyone into the cryptocurrency market to begin with. Very few people show up in crypto just hoping for a safe, standard 8% annual return. They are looking for the extraordinary.
And honestly, the math makes it so easy to see why. Just follow the multipliers for a second. You take a simple, low-risk $100 investment. If that project delivers a 10x return, boom, you suddenly have $1,000. A 20x return takes you to $2,000. If you hit 50x, you're at $5,000. And if it somehow achieves that legendary mythical 100x multiplier, your original $100 becomes 10 grand. That is incredibly intoxicating for an ordinary investor. You don't already need to be rich to make a massive, meaningful change to your financial future, right? You just need to find the right multiplier.
And here's the thing. These dreams aren't totally unfounded. There's real historical precedent for this. Just look at XRP. In its early years, XRP traded for literally fractions of a cent. Almost nobody imagined how massive it could eventually become. But then, during that wild 2017 bull market, it rocketed to over $3 a coin. That represented gains measured in the thousands of percent for those early investors. It's stories exactly like that one that spread like wildfire and inspire millions.
Let's move to and see how this builds into Section 1, the reality of risk.
So, while the fantasy of the moonshot is a lot of fun to think about, the sobering reality of the market is where you actually protect your money. I really want this quote from our source material to sink in. For every cryptocurrency that becomes a huge success, there are hundreds that fail. That is the cold, hard truth. Some projects just quietly fade away. Some lose almost all their value. Others just never get any real adoption. Ignoring this fundamental risk is, without a doubt, the absolute biggest mistake investors make. You just cannot build a financial strategy on dreams alone.
The token Linea is actually a perfect example of this. The creator from our source material, TheAbrahamCryptoLand, is strategically accumulating this token right now. Why? Well, it operates in a crucial area of the blockchain industry, it's connected to very experienced companies, and it focuses on scaling Ethereum. So it has massive potential. But notice that word, potential. Will it actually deliver a 10x or a 20x or a 100x return? Literally nobody knows. The wild volatility we see highlights the massive, gaping canyon between a project's potential and absolute certainty.
Now, what's really interesting about this slide is just how many things have to go perfectly right for a token to succeed. Think about it. You've got the technology, the adoption, the competition, constantly changing market conditions, shifting global regulations, the day-to-day execution of the development team, the overall health of the entire crypto market. It's overwhelming, right? All of these factors matter, and any single one of them can completely sink a project. Good technology alone is never enough. It just goes to show that predicting the future of any coin with 100% accuracy is literally impossible.
Which brings us to Section 2, investing versus gambling.
So, if predicting the future is impossible, how do we actually proceed? Well, it comes down to calculated moves versus purely emotional reactions. Internally, in your head, these two mindsets might feel kinda similar, but notice the really subtle shift in language here. The gambler says, "I'm sure this coin will explode." They are demanding certainty. But the disciplined investor, they say, "This project looks really interesting, but I could still be wrong." They openly acknowledge all those chaotic variables we just talked about. And let me tell you, those two slightly different sentences lead to drastically different financial outcomes.
Because of that mindset, the gambler completely ignores risk. They convince themselves they've hit the jackpot, so they rely entirely on hope and they just recklessly overinvest. The investor, on the other hand, respects that uncertainty. They don't just sit around hoping, they prepare for different possible futures. And crucially, they control their position size. Because as the old saying goes, hope is not an investment strategy.
And that brings us to one of the most powerful takeaways from our explainer today. The market doesn't reward certainty. The market rewards good decisions made consistently over time.
Let that sink in for a second. You do not need to be certain to invest. Nobody, not the famous analysts, not the Twitter influencers, not me, nobody actually knows which coin will be the biggest winner 5 years from now. You just need a strategy that lets you win big if you're right, but absolutely protects you if you're wrong.
Let's look at how to actually do that in Section 3, the 5% rule.
So, the crucial point is how we take this mindset and practically apply it to a real portfolio. Our source provides this fantastic real-world strategy using the Linea token, and it is all built around one very specific number, 5%. See, even though the creator truly believes Linea has the potential to become a massive 10x or even 100x winner, they strictly restrict their investment to just 5% of their total crypto portfolio.
And this brilliantly illustrates exactly what we mean when we talk about a disciplined portfolio. You might see Bitcoin making up 40%, Ethereum at 20%, and then right there, Linea is strictly capped at just 5%. Why do it this way? Because your confidence should never, ever determine your position size. Your risk management should. Think about it. If Linea becomes an incredible success because of the power of those multipliers we talked about earlier, that 5% is still going to have a massive, life-changing impact on the overall portfolio. But, and this is the absolute key, if Linea fails completely and drops straight to zero, the portfolio survives. The investor is completely protected.
Because honestly, that is the ultimate goal here. Survive the downside. Preserving your capital is so much more important than trying to get rich overnight on one single blind guess. You literally have to stay in the game long enough to actually benefit from your future winners. If you blow up your entire account on one really bad bet, you're just out of the game entirely. Game over.
Which leads us perfectly into Section 4, building an investment system.
To really implement this survival-first mindset into your own crypto journey, it all comes down to establishing specific rules to remove your emotions from the equation. Step 1, decide your portfolio allocation, like that 5% rule, in advance. Step 2, decide your buy levels way before prices ever start to drop. And Step 3, decide exactly where you plan to take your profits. See, when the market gets incredibly volatile and your emotions inevitably spike, you shouldn't have to think. Your decision should have already been made when your head was clear. That is how you eliminate poor, reactive, panic choices.
And right alongside those rules, you're going to need what is probably the most underrated investment skill of all time, patience. Look, we all want to be on the exciting rocket ship, right? But the reality is, successful investing is often incredibly, painfully boring. Sometimes the absolute hardest part isn't hitting the buy button. It's waiting. It's waiting while prices do nothing but move sideways for 6 months. It's having the iron discipline to just ignore all the social media hype screaming at you about the next guaranteed moonshot.
Discipline, patience, strategy. Those 3 words summarize the entire core philosophy of our source channel. It really is the whole shebang. Cryptocurrencies are going to come and go. Market cycles are going to shift wildly from bull to bear and then back again. Prices will fluctuate like crazy, but the mindset of a disciplined investor, that never goes out of style. That is exactly how you build real, long-term wealth in this space.
I want to leave you with this provocative question to chew on as we wrap up today's explainer. Take a hard look at your own portfolio and ask yourself honestly, are you trying to predict the future or are you preparing for it? That right there is the dividing line between gambling and true investing. I really hope this framework helps you manage your risk and stay on the game long enough to see your own massive success. Thanks so much for joining me on this deep dive.